Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we are discussing selling covered calls on my Tesla position. I finally did it. I caved in. All you guys commenting, you're just wasting all that potential, just having that Tesla sit there. I did it. I sold some covered calls on Tesla, and then I'm just going to tell you about which options I picked. So as you guys know on this strategy, we have good high quality holdings, and then we borrow money against those holdings. And that is usually what I show on this channel. I show pretty much these things pay out, and this is the basis of my portfolio, and then kind of divvy up where the money goes, as well as like what the goals are associated with that. Now, what I did is I have 834 shares of Tesla. And in my last video, I was showing my 0DTE, option plan, which I was using option collateral as a side. However, this option plan, I'm actually using my real Tesla shares. So I have 834 shares of Tesla. And what I did is I sold covered calls against those. So when you own shares, you can sell covered calls against your positions. And so what I did, I pressed this trade option on Monday. I picked the expiration to expire on Friday, and I'm selling a weekly call. So what I did, I sold a call. And one of my main things was, my biggest fear with Tesla is that it runs in either direction. So it either massively goes up or massively goes down. There's not really an in-between. There's no oscillation in the middle. It just violently moves. So what I was deciding when picking my call options, school of thought, most general schools or general option investors say if you pick a delta of 30 or even 20, that would be a good range. But I believe that's more for if you're focusing on investing in SPY or doing options like that. So this is like a delta close to 30 here. And if I sold 8 contracts, I would sell them at $310. So if you did 8 contracts times by 3, it's what, $2,400. I would get paid $2,400 that week. However, just because you get good amount of option premium doesn't necessarily mean that's the best option to pick. You also have to think about the share price that you bought it for, as well as like the option you're selling at. So like, for example, like if you bought this at $200 a share and you're selling this 55, then you get $55 per share on top of this premium. So what I was deciding is, I'm not 100% okay with my shares being called away, but I decided that if I picked a delta that was high out of the money, that I would be much more comfortable doing that. So at the time, this 275 call was actually a delta of 10 because the share price decreased. It's much lower now. And my options I received was $1.08 per share, which times by 100 is $108 per contract, times that by 8 is what I got. So let's actually click on the real contract here. So we'll just go over the details here. So as you can see here, this is the current price. I'm up $400 on this position. Expires this week, and you can see this is the average credit. And then they sold 8 contracts, and then like you can see that there's all the different implied volatility in the Greeks and all this stuff. And right now that it's at a delta of 6, which means that you have like a 6% chance that this would become in the money, and then you'd either have to roll your position or whatnot. But you can see here I got paid $864. With that being said, I always make a spreadsheet for everything. So if you annualize that amount of income, so that $864 times by 52 weeks would net you about $44,000 a year, which is a yearly yield of 29% off of the original investment. So my average share price for Tesla is about $181 a share. On my Robinhood, the share price or my average paid is incorrect. I switched brokers many times, and the cost basis was lost in between the transitions. So my true cost basis is actually $181 a share, or from a numeric value, it was $154,331.37. So you can see, like, technically I'm really up $47,000. That's the current market value. And then I do my little thing here where, I have my option premium, how much you paid. I didn't buy this position back because I don't feel the need to roll it or anything like that. For the most part, I'm going to let it expire. However, there is a Tesla event tomorrow, 10/10. There's going to be a robo-taxi event, and I don't know if this is something that's going to move the market or not. I don't know if this is something that's already priced in, so we'll see how that event plays out. And then if I do sell a covered call, there will be some sort of capital gains. I have, have that accounted for here. Fees, 3 cents per option contract, and then the tax man, you always set the money aside. So just from selling this week's worth of contracts, I already made $431.88. And again, this is not using margin. This is my actual money that I've accumulated over the last 8 years, picking up all those overtime shifts and throwing money into the market. That is what it is. It's not margin investing. This is just the option portion. I have that 0 date to expiration option strategy here. We're not using the option collateral. Neither are we using that margin for like Tesla or my AMZ position. But I just want to show you guys that I did do an extra thing in my portfolio, which is sell the covered calls on the Tesla position. And, we'll see how we navigate that through the future. If you guys have any pointers or tips on how to option invest, I actually used to do this many years ago, and I made a decent amount of money selling options on Tesla. But then I for whatever reason, I stopped, and probably it's because at some point I was margin called or whatever. But now I'm going to do it in a much more safe manner. I had some good points where people said that, if your options are about to be called, you can create a spread with it. So some good information. But, right now, this option that I'm selling is going exactly as planned. I guess my question is if this does get assigned, because at some point it is an inevitability that your options will get assigned. The question is what am I going to do with it? Am I going to want to roll with it? Eat up a lot of premium or gain because I'm paying to roll it, or do I let it get assigned and then start selling cash secured puts on it? I'm not entirely sure about what the plan is, but so far we're doing good. And we'll go from there. So if you guys have any questions, definitely let me know. Also, don't forget to check out my brother's channel. It's in the description below. But besides that, y'all have a good one.